I'm Matt Bouchard with NARI, and I'm in London for EPRA's annual convention. I'm joined by the host of the event, Philip Charls, the CEO of EPRA. So Philip, what activities has EPRA been focused on in the past year?
Matt, we have overhauled in the past 12 months completely our best practice reporting recommendations, a very important instrument for our members to apply by accounting rules. 70% of our members at this point in time use these reporting standards. Number two, yesterday we announced, and it's a really big step forward, that we are going to introduce uniform sustainability key performance indicators.
What are EPRA's main objectives over the next 12 months?
For us, really important, Matt, is that we improve our visibility within Europe. At this point in time, and of course we keep doing that, we are very well known within the specialist investment community. But through overhauling our website, www.epra.com, we do want to reach more in-depth and also more on a general level, the journalists, decision makers, government, regulators, because this group needs to better understand our business and the importance for the economy.
Drilling down a little bit, what does EPRA hope to see achieved in the German listed real estate market?
The German market, Matt, is a complicated market. If you look at listed real estate at a global level, 6% is listed. Europe, however, is only 3% listed. Why is it? Because of the underperformance, so to say, of Germany. Only 1.5% of German real estate is listed. The German market is huge. It's the biggest actually in Europe. It's 1.3 trillion. If you look at the funds that are active involved in Germany, you talk about 120 to 130 billion in private funds. Then you have 80 to 90 billion in German open-ended funds, that at this point in time some of them are closed for redemption in difficult circumstances. Then you have 30 to 40 billion in special funds and only 20 to 25 billion in listed companies. So it's really underperforming vis-a-vis other parts of the world. Where is it sitting at this point in time? A lot of real estate is sitting with the banks or with some governments, and what we hope to achieve in the next years to come, because it's not a short-term process, is that more of that real estate gets listed and thereby access to investors. Particularly the international investment community, think big pension fund institutional investors do like to have access to the biggest and most successful economy in Europe.
Overall, how would you sum up the mood of the executives and investors who attended this year's event?
I think one thing, the companies in Europe at this point in time are very well structured and came out of a difficult period on a very solid footing. Having said that, I think there's concern in Europe about the economy, but based on the solid basis they have, I think companies are very well positioned that whatever will happen and whatever opportunity arises to grasp those opportunities.
Philip, thank you very much for joining us.
My pleasure.
For more on the global real estate investment market, be sure to visit REIT.com and EPRA.com.